Buying a home is super exciting. Buying your first home is super exciting and an awesome accomplishment. However, there are a few things you have to look out for to not end up with buyer's remorse. What's up, everyone? This is Mischa Thompson with SSK Realtors here in Warner Robins, Georgia. If you haven't been here yet or haven't watched any of my videos, make sure you hit that subscribe button and the notification bell so you stay up to date with the latest real estate videos I'll post. If you watch on Facebook and YouTube, make sure to like and share. Let me know in the comments below what you think about the video, and let's go right to it. Today's video is about first-time home buyers. First-time home buyers get pulled in all kinds of different directions from family, neighbors, friends, colleagues. There is a lot of noise around them when it comes to the first-time home buying process, and it gets very confusing for them. So I came up with 5 things first-time home buyers should not, absolutely not do when it comes to the purchasing process of their future house. Number 1, and this is probably the biggest mistake first-time home buyers do when it comes to purchasing a home. Do not look at properties prior to being financially approved. Reason for that is if you are not financially approved, pre-approved with a local lender yet, you are going to look at $300,000 houses, but you might only be able to purchase a $200,000 home. That is a big problem, since you probably looked at $300,000 houses because you thought, hey, I'm good. I can definitely purchase a $300,000 home. And you've absolutely fell in love with the house you looked at. And then you go to the lender to finalize your financing of the purchase, and the lender tells you, hey, I'll check your credit score, I checked your debt to income ratio, and you're only good for $200,000. That is going to burst your bubble in the first place. You're going to be a little bit confused. Why? I thought $300,000. The lender only tells me $200,000. We already found a house that we like. But not only it does burst your bubble, it makes the home buying process start very rough, and you're going to be disappointed. To not have that disappointment right away, if you are ready to purchase a home and you are a first-time home buyer or any home buyer, go and talk to your lender, to any local lender, so you can get the best rates and deals possible for your mortgage. And if you have the pre-approval in hand, then go and look at houses with your agent. It makes it also easier if you find the perfect home in that price range, putting in an offer right away because you are pre-approved. You know you're financially good for that amount of money. You don't look above what you can do. It makes it easier for you. It also makes it easier for the real estate agent, and the whole transaction will be smoother. Number 2, stop looking or waiting for the unicorn that does not exist. There's a lot of stuff that is shown on TV, HGTV, that makes all those properties look perfect, but stop chasing the unicorn. Stop waiting for the unicorn. The unicorn does not exist. And if it does exist, it's probably above your price range. Of course, people look for granite or quartz countertops, stainless steel appliances, awesome school district, close to shopping, close to town, amazing neighborhood. But make sure you make your own list of the wants and the don'ts and the needs and the not need so much, and adjust that list during that process. It is very important. It makes it easier for you. It makes it less stressful, and try to maybe compromise some things. You might have a house that has Formica countertops but is amazing all around. You might have a house that has granite countertops but other parts are not that great. Make sure you adjust your list, and if you have 75% of that list in a house, you probably just found the perfect fit for you. Number 3, make sure you do not miscalculate the cost of buying a house. Yes, there are costs involved with it on the buyer's side, and yes, your agent and your lender should exactly tell you what those costs are and prepare you for them. But keep those costs in mind. Keep a little bit of money in savings and be prepared to make those payments. One of them is earnest money. Very important for the transaction. Usually, and most likely, a transaction will not happen or contract will not happen without earnest money. Earnest money depends in which state, where you at. It varies from state to state. So make sure to talk to your real estate agent to see what the best possible amount of earnest money is where you are at. Second thing is inspection. You gotta pay for the inspector up front. Make sure you know how much you have to pay. Make sure you pick a good one. Make sure there are a couple of reviews out there for that specific inspector. Call numerous inspectors and see what their experience is, how much they are, and make sure you have that amount of money in your savings. There are other closing costs involved, title fees, and all kind of lending fees, but talk to your lender about the closing cost package and see if you actually have to bring something to closing. Sometimes you do not, because the seller is generous enough to pay some of your closing costs. Sometimes you do have to bring something to your closing, and the title company you close at or the attorney office you close at, depending in which state you are, can tell you exactly how much that number is. Your lender probably can tell you as well. Make sure to be prepared that you have to pay stuff, and make sure you have that cushion in your savings to be prepared and don't experience any surprises. Number 4. Don't assume that you need 20% down payment to purchase a property. There are numerous other options out there, and you just got to talk to your lender. Hopefully you already choose one and know that you have to be pre-qualified to start the purchasing process. But make sure you and your lender figure out which mortgage package would work best for you. There is not only the conventional loan, we have FHA, which could be as low as 3.5% down. We have USDA, which is no down payment. And we got VA, which there is no down payment. There might be any other options for you. You just got to check with your lender what the stipulations are for the certain mortgages and if you meet those criteria. But check with your lender and do not assume 20% is what you have to bring as a down payment. Last but not least, number 5. And this is a problem and a mistake a lot of first-time home buyers, but also a lot of seasoned home buyers do over and over and over and over again. And I cannot talk about it enough with clients, and the lender probably can't talk enough about it with clients either. Do not do any big purchases that hit your credit prior to closing. Yes, you are under contract, you close in 20 days, seems like a done deal, right? But no, it is definitely not. There could be an hiccup just because you thought, hey, I need new furniture. I'm buying a new house, or I got a new house and I need new furniture. Let's go to the furniture store and purchase a lot of furniture, and financing it is a big mistake. As well as, hey, I'm closing in 4 days. I'm gonna purchase a new car because the deal is done. No, the deal is not done. And if you're gonna purchase a car prior to closing, or max out your credit card, or financing in general, if you finance anything big prior to closing, it could end up in a huge issue, a huge disappointment, and a nightmare. The reason for that is that the lender will pull your credit prior to closing. Let's say 3 days prior to closing, the lender pulls your credit and sees, well, crap, his credit score changed. What happened? Your debt to income ratio is all of a sudden super high because you bought a car or financed furniture or maxed out your credit cards. Your debt to income ratio does not match with the debt to income ratio you had before, so you don't actually qualify for that loan you applied for. What are we gonna do now? We're not able to close because with that debt to income ratio, you actually can't afford the house you put a contract on, and you're about to close in 4 days. Bummer, isn't it? Well, to avoid that nightmare of not closing for you and for the seller, who's probably going to be very, very aggravated that he can't close 4 days prior to closing because you did that big purchase and he already moved out, or she, and they're ready to sell the house. All of a sudden they can't because your debt to income ratio doesn't match your loan requirements and you're not able to purchase that house anymore. Well, now that seller has to put the house back on the market, and he and she loses money again, and you are not going to be a homeowner in 4 days. It is now going to take you way longer to be a homeowner in that price range again. So don't do it. All right, everyone, that was the video. I hope you enjoyed watching it. Let me know what you think about the video in the comments below. If you have any other questions about that whole first-time home buyer process or real estate in general, give me a call or text me. Number should be right here down below somewhere, 660-624-2196. Or send me an email to mthompson@cbssk.com. mthompson@cbssk.com. I hope you guys have a great day, and I'll see you in the next video.